This is On the Money with financial advisor Ryan Wheelis, helping you redefine your retirement. I guess, Ryan, both you and I kind of pushing some magic numbers ourselves. Notice through another Census Bureau here, the U.S. median age has hit a new record high, I guess about 39.1%. Do we have more Americans getting older than we have younger Americans coming onto our planet?
Oh, for sure. The baby boomer population is retiring in droves and has been for nearly 10 years now, and that's not going to change. There's a lot more to go. The concern has always been, hey, we've got enough workers, that are out there creating a paycheck to where payroll taxes are flowing in to pay Social Security and fund entitlement programs like Medicare and Medicaid. Mm-hmm. But that's not the case. It's where we do have influx, don't get me wrong, but the majority of the people in this country are older than the minority of the country, which are younger. And that is a potential problem in two ways, because is there a tax base large enough coming from the younger folks to support the needs of Social Security and Medicare, right? The other part of it, though, is that if you are retiring and you're, like a lot of people do, you're depending upon the stock market to produce the income so you can maintain your lifestyle. Mm-hmm. Who's buying your stocks?
Where's that going? I'm curious about this. What happens when this baby boomer generation starts selling off the stock to need it for their own income?
It's already been happening, Spike, and a lot of that, by the way, is why market volatility, not just in the last year, last 2 years, 3 year, 4 year, 5 years, the last 10 years has been as high as it has. And the emotional aspects of the market have gone through the roof in a big, big way. And you're seeing much steeper declines followed by much faster, sharper snapbacks. And a lot of that has to do with people selling the market and needing income. And really, there's three basic ways to do this. You can buy an annuity and use Social Security and an annuity to have guaranteed income for life, okay, and not have to worry about selling stocks each month and that sort of thing, or using dividends or bond interest each month to live off of, okay? You can have a 3-year cash bucket and have your money in the market and own no annuities or no anything like that, which that's fine too. It just depends on what you want to do. And then you've got, $200,000 in an account somewhere and then $800,000 in the market. You live off that $200,000. And then in a 2 or 3 year time period, the market's grown your portfolio from $800,000 back to $1 million. Take the $200,000 off again, just kind of rinse and repeat. You can do it that way. Or you can simply live, out of your market portfolio, and that's your market portfolio provides your paycheck. All those are ways to do it, right? But at the end of the day, you still have to be selling something to get your income, because what if your dividends aren't enough? What if the company you're invested in cuts their dividends? Okay. What if you have a bigger expense and you need to get to some additional capital to buy a car? You got to sell stocks off, sell mutual fund shares off, right? To get the capital to buy that car, or for whatever the need is, new roof of the house, new air conditioner, whatever it is. But the bottom line is you're liquidating stocks, right? You're liquidating parts of the market or bonds, and that's putting downward pressure on prices. And the concern is that the younger generation's not going to be there in a sense to where they're going to buy those stocks from the older generations. And it's going to create a potential downturn in the market. And it is furthered by younger people are seemingly more interested in crypto assets in a big way.
Okay, so not buying up your Fords, your Procter & Gamble, your oil and gas. They're buying the digital assets.
And here's what's even more interesting. Trump is moving right now to allow people to access private credit and private equity inside of 401k plans. Those are private markets, Mike. Those are not public markets. So if younger generations start investing into private markets and not public markets, it compounds the problem, because their dollars are not going into the market to make up for the dollars coming out of the market for the older generations. A lot of stuff that's happening that just hasn't been here in the past. And the landscape of retirement is changing so fast and so dramatically. The need for two things is prevalent. You need to have a good advisor, folks. All right, someone who can navigate this. I just had Tom Hegg on. Okay, Tom Hegg on the podcast.
Give me a little background. We'll explain, because we'll play it for you on the radio. But real quick, tell us.
He's done 5,000 presentations to financial advisors across the country, preaching about how to craft retirement income, how the need for annuities and also life insurance, and to help structure the passing of assets. For instance, he said, listen, spend your money and leave your kids life insurance. Don't leave your kids an IRA. Make sure your income that you need for retirement comes from a guaranteed source. because you're going to live longer than any generation in history by a mile. All right. So you can take more risk or you can have guaranteed income. But neat guy. But what we're saying here is that at the end of the day, you want to be in a situation to where you have guaranteed income if you want it. All right. And the reason why you want to be in that situation, Spike, is that if we have these dynamics, these changes, okay, which we're going through, guaranteed income is a good option. You also want to have a really good advisor, okay? A good advisor can help you navigate which options are best for you, all right? And lastly, you have to have a good plan, but you have a plan stress tested. Every single year, your plan should be stress tested. And the reason why you want to stress test it is this. What if, you were scared of crypto all these years? But now all of a sudden you can buy crypto in the form of an ETF. Well, what if we allocated 10% of your overall portfolio to crypto? What does that do to the portfolio? Interest rates right now are getting really juicy. The 30-year bond's almost over 5%, which by the way is a typical sell signal for the stock market, by the way. Okay. But does that make sense now to start looking at things like life insurance for income or annuities for income because the payout rates are so favorable, right? So it's just so important that you have to have somebody on your team to help you navigate the very complex world of retirement because just so much has changed. And folks, the change is not going to stop. In fact, the rate of change is only going to increase dramatically, which is why you've got to have a great team, a good advisor, and someone who can help you stress test your plan on an ongoing basis.
The phrase of peak 65 is something that you introduced a few months ago, kind of end of last year. More Americans turning 65 in the United States, and I'll probably broadly say across the world than at any time in history. About 4 million a year from now, also through 2027, 2028, about 11,000 a day. What other stressors does that put not only on our economy or the systems, but especially in Texas? Long-term care facilities. I think this is an independent report I'm going to look up. I want to find out how many long-term care beds and facilities there are in each state. I mean, as we start to need them 5, 10, or 15 years from now, are there enough? Are we going to figure out how to self-fund on our own, how to have long-term care from our own nest egg, Ryan? Which are you more in favor of right now, especially if we have that widow who is going to outlive us by another 5 or 10 years?
Spike, when I started in this industry back in 2006, we used to say you had a 1 in 2 chance of needing long-term care insurance or having to cover long-term care cost. Now we're saying it's 70%. And the reason why that is the case is people are living longer. In fact, insurance companies have actuaries who can tell you to almost the second you're going to die in some cases. Go look at Gary Braca, by the way, the health guy, the 10X health guy, okay? That's what he used to do for the insurance companies. And so what they're looking at is going, hey, we can't price this stuff because we don't know how long people are going to live. So I'm a big fan of having a plan. And there's a lot of things you can do plan-wise. Tom Hegna was telling me, by the way, there's a way to get a line of credit, kind of a reverse mortgage line of credit on your home to where if you need to get access to that money, you can. But if you don't access the money, you don't have to worry about it. And if you do access the money, the spouse continues to live in the home until you die, okay? You could also buy things like life insurance. Yes, folks, life insurance. Tom Hegna is buying life insurance at 65 years of age. Why is he doing that? Because he's paying premiums to have a death benefit for his kids that's tax-free when his kids get it, instead of leaving them a tax time bomb IRA. But in that life insurance policy, there's also long-term care benefits he can use to cover long-term care needs if necessary. Okay. There's also annuities out there that pay out guaranteed income for life. But if you go into a nursing home or can't complete 2 out of 6 activities of daily living, those income payouts double while you're under that duress. So there's a lot of ways to hedge out the risk of long-term care. But the most important thing, Spike, is to have some sort of plan for it. That plan, by the way, can also be staying healthy, staying active. A lot of things you can do.
Yeah. Folks, you can call the phone number right now as we are heading into peak 65. We're actually in the midst of it. More Americans turning 65. What is that going to do to the systems? Do you have a plan in place? Do you have a long-term care plan in place? Do you have a spouse who you are concerned might outlive you by a good 5, 10 years? What happens when your Social Security goes away? That income goes away. By the way, what happens if you go into long-term care before your spouse? How much is that going to eat away of your nest egg? We need to have those protection plans in in place. Let us do your Peak 65 review, helping you redefine your retirement. Call the phone number right now. It is no cost to our radio listeners or you on the YouTube watching this video. 844-944-7555. Call that phone number. Folks are standing by. They'll schedule an appointment for you, or even easier, just text us. Type in the word plan to 21000. That's 21000. More with Ryan Wheelis on the money, helping you redefine retirement right after this.